Real estate sector has been under pressure for a while now. Unsold inventories are a nightmare for builders. Besides, a glut in the economy caused by demonetization and the GST had thrown the sector off track. But private equity investors have stepped in as white knights over the last few quarters. So what's fueling their confidence in this space, and how effective will the lower GST rate from the 1st of April be? Let's find out all about the sector with Anuj Puri. He's the chairman of Anarock Property Consultants. Anuj, thanks very much for taking out the time. Let's talk about the interest that's coming in from private players, and how big a positive do you see that to be? And also, since we're talking about the new GST from April 1st, the dynamics of how that plays out for the entire sector.
So good morning to you and your viewers. Whilst the residential sector is reeling under huge pressure, the commercial sector, on the other hand, is doing fantastically well. It's relatively a small part of the Indian real estate, because residential is about 85% and commercial is about 15%. But that 15% is doing fantastically well. I mean, if you were to look at 2017 and 18, the supply of office spaces that came up was 58 million square feet, whilst the leasing activity was 72 million square feet. So way ahead of the supply. Last year, 2018 calendar year, we had nearly 40 million square feet. I mean, it was the best ever year that we had seen that got leased. Vacancy is at low. Bangalore is at 6%. Hyderabad is at 7%. There is a huge amount of positive interest coming in from IT, ITES, BFSI, startups. The new thing that has come up, who's taken up a lot of space on lease, is the co-working spaces. So clearly the interest that is coming in from the occupiers is then driving the private equity to come into this space. When we speak about the private equity, 3 or 4 things very interesting that have happened if you analyze 2018. The first is that the deal size has gone almost 2.5x. So in 2015, the ticket size of an office space that was being bought by a private equity was about 48 million square feet. We're not now talking about 128 million square feet for $128 million for one deal. The top 5 deals in the private equity space on office was nearly 50% of the amount invested in 2018. So $4 billion was invested in office space by private equity, and the top 5 deals was nearly 50%. Clearly, the REITs that has been done of Embassy and Blackstone has been very positively accepted by the investors. I mean, it's oversubscribed by 2.5x. So if you look at it from the commercial sector, your demand is ahead of the supply, your leasing activity continues, and for the near future, it seems that there is going to be a lot of more absorption coming in from various sectors. Private equity is coming in, not only international sovereign funds, pension funds, but also insurance funds now getting into this space. And then finally, the REIT that has happened, because that is where the private equity has seen that there is a credible exit of the investments that they are doing in India, and thereby they can make profit.
So as per your report, private equity investors over the years, particularly in 2018, have invested about 69% of the money that's come in has gone into the commercial sector. Foreign equity participation has been on the higher end in 2018, 71% in the commercial sector. Can we assume that real estate now is at the cusp of a big change, where the bigger focus is going to start being the commercial space, and as you pointed out, the demand outstrips the supply, and that's where most of these real estate players are now going to start laying focus?
You're absolutely right. I do think is that there are a number of developers who are wanting to slow down on the residential, but double down on commercial. Because it does appear that the demand will continue to stay strong, the rentals will continue to increase, and clearly the private equity largely coming in from Singapore, Canada, and the US is interested in income yielding assets, which are largely office, retail, warehousing, and logistics. But in those three sectors, office is the biggest part of it. And we do feel is that not only from a development perspective, that the developers will continue to focus perhaps more than residential on the office sector, but equally the private equity who's coming into India is wanting this space. And if you were to look at from a private equity point of view, this is a very stable, perhaps a lot less riskier, where they're buying offices that are completed, that are 100% leased, and it is at an income of say 8%. That they are being able to come in and acquire, rather than on the residential where they have to take a huge amount of development risk, land approval, construction risk, and then after that the sale risk. Here they are saying is this is a fully developed office asset, fully leased out. We're very happy with the 8% return per annum that we are going to be able to secure.
Anuj, good morning, Neeraj here. Just wondering, when you're talking about the deal size being higher, is it a factor of pricing moving up as well, or is it a factor of more square feet or larger areas being snapped up and therefore the deal size moves up?
I think it's a very good point, Neeraj. It is a combination of both. It's a combination of pricing moving up and equally the square feet getting much larger. So, previously private equity were looking at buying building in parks. Today, they're looking to buy the full park itself. And that's what has changed, because the confidence that the private equity has been able to demonstrate in the office sector, where there are stable occupiers, every month the rent comes in. Majority of them are international occupiers, largely American, who are outsourcing to India. They get a huge amount of comfort, in a building where there are lots of American or blue chip Indian occupiers. And from their perspective, they're now willing to write larger dollar checks, which I think when they came in looking at this sector in 2010-11, they were a little bit mindful. By 15, they had really got some confidence that this is going to be a good sector. But really 2018, the stark difference in the ability to write a check for a larger transaction was very visible. As I said, Neeraj, it's almost 2.5x of the average size of check which private equity was writing in 2015 versus 2018.
Anuj, what does this mean for the players? I mean, the reason I ask this because the Embassy REIT's IPO brought about a spurt in prices for a lot of these listed players, which had small or large commercial real estate properties ready or under development. Do you reckon more of the larger players will come out with REIT offerings in the next 1 year on the back of what's happened to Embassy REITs? And will that be beneficial to your mind for, in a big way, to these players which will have these offerings? Because I reckon everybody from a DLF to a Prestige Estates to a lot of Bangalore-based players do have large commercial offerings which are rent yielding.
Very interesting point, Neeraj. So I'll answer it in two parts. The first part is it going to be a major impact on the Indian real estate? Perhaps not as much. And the reason I say is, Neeraj, is because if you look at the overall real estate, 85% is still residential. In residential, there can't be a REIT done because the yield incomes are about 2%. At 2%, there is nobody who's going to buy a REIT. So 85% of the Indian market really goes away. We're talking really on the 15% of that market. In that 15%, Embassy and Blackstone's portfolio was nearly 33 million square feet. The total that we believe that can be REITed out is about 300 million square feet. So what Embassy and Blackstone has been able to raise, we believe the potential of the Indian REIT market is 10x of that. How does it help the overall market is many of these players who are going to be able to then follow and do the REIT, and I think you're absolutely right, there will be more REITs that will come up on the back of the success of Embassy Blackstone, which was heavily oversubscribed, and the ability that there is nearly 10x of stock available to be REITed out. These developers will then start to bring their leverage down. by bringing the REIT into the market, raise the money, bring the leverage down, and that money is going to go to the banks where they'll be able to repay their loans towards real estate, which the banks will then be able to roll it over to other real estate players. And that's where I think is that there may be some benefit that the residential sector may get because of the REIT. As the leverage of these developers go down and the banks get more money from the real estate, their ability to then reinvest back into the real estate, the cycle will start to move.
Anuj, just to follow up on that, obviously, while the potential is 10x, as you said, it is the timing of it. And like you yourself said, the commercial, the market is just about 15-odd%. So highly underpenetrated at this point. What do you see happening first? A big boost for the commercial sector and the big growth numbers that come in, post which the REITs start to play a bigger part? Because obviously, we are nowhere close to some of the other countries where REITs take place in a big way. So what happens first? Does the focus on growth within the commercial pocket happen first, and then the shift to monetizing that via REITs? Or, what you have in your portfolio, just go out with it right now?
So my thought is that, you will see perhaps more REITs coming in first, because, there is 300 million square feet of stock available to be REITed out today. Whilst on the development cycle, it takes 3, 4, 5 years for new space to come in. So clearly, I do feel is that you will, in close succession of the success of Embassy, Blackstone, perhaps start to see more REITs coming into the market. Simultaneously, there will be development, but that development cycle, by virtue of just pure construction cycle, takes 3 to 5 years. And prior to that, I feel is you will see a number of other REITs happening. Clearly, it is the first REIT that has happened in India, and I'm delighted, that it has done well. It has taken a long time for the first REIT to come in. 2014 was the announcement when the government had made to allow REITs to come in, and 2019, so nearly 5 years later, the first REIT came in. But when you look at the other mature markets, the US or Europe, even in those markets, took 5 to 7 years from the time that the government had made the announcement of the REIT to the first REIT coming in. And soon after the success of the first REIT, there were a number of other REITs that followed. So I do feel is that India is going to follow that suit, where you will have REITs coming in before the development really puts in completed office stock into the kitty.
All right. We leave it at that, Anuj. It was a very interesting conversation with you. Thanks so very much for joining us this morning.